You are watching this video while sitting up or laying down. Now imagine you are trying to move but you cannot. That is what needing long-term care services can feel like. 52% of people turning age 65 will need some type of long-term care services in their lifetime. 83% of care provided to older adults is delivered by friends or family members. 44.8% of applicants aged 70 to 79 are denied long-term care insurance due to health issue. Not everyone applying for long-term care insurance get accepted. Having a long-term care plan can help us and our family when we cannot perform daily activities. Hi everyone, my name is Tan and I'm an independent certified financial planner practitioner. Long-term care cost is one of the biggest expenses in our lifetime. Today, we are going over what is long-term care insurance? How much does long-term care insurance cost? Understanding the long-term care insurance premiums and the tax benefit. How can we qualify for long-term care insurance? What can we use long-term care insurance for? Strategies on how investors can mitigate the risk. Two big disadvantages of long-term care insurance products. Three main reasons why investors buy long-term care insurance policy. Questions to ask ourselves to see if long-term care is right for us. Popular optional policy features. 6 important steps in selecting a long-term care insurance policy. And finally, what are the next steps? What is long-term care? Long-term care is someone taking care of us when we need assistance or supervision to perform basic everyday tasks, which is called activities of daily living. What is long-term care insurance? Long-term care insurance is an insurance product that helps reduce or eliminate the cost of someone caring for us and helps pay for a caring facility, such as adult daycare center, nursing home, special care facility, etc. Long-term care insurance is different from health insurance, Medicare, and Medicaid. How much does long-term care cost? The cost of long-term care will depend on where we live and how we want to receive care. Going to Asia to receive care is super cheap compared to being cared for in the San Francisco Bay Area. I have a client that pays $10,000 a month out of her pocket for a nurse to take care of her husband at home. They don't have long-term care insurance because they thought they would never need it. By the time her husband needed care, it was too late to buy a long-term care insurance because he is uninsurable. How much does long-term care insurance cost? The policy could range from $50 a month to $500 a month. Never let costs get in the way of getting a policy because a professional can design a policy to fit within your budget. That's the easy part. Of course, we have to qualify for a policy. Long-term care insurance premiums and the tax benefit. Depends on how we are structured, as an individual, pass-through entity, or corporation, and where the money is coming from to fund the long-term care insurance policy. The long-term care insurance premiums could be tax deductible and the benefit payout could be tax-free. Please note that there are limitations and we have to do it correctly to get the tax benefit. You can look into Internal Revenue Code 7702B and Code 213. This is something you should discuss with a qualified tax professional to learn more. How can we qualify for long-term care insurance? We need to be certified by a doctor and cannot do 2 out of the 6 activities of daily living for 90 days or cognitive impairment. Cognitive impairment is when we cannot remember, we cannot learn new things, we cannot concentrate or make daily decisions. Unable to perform 2 of the 6 activities of daily living, ADLs, for at least 90 days. Examples of activities of daily living are eating. We need someone to feed us. Bathing. We need someone to give us a bath. Dressing. We need someone to help us change our clothes. Transferring. We need someone to help us move from our bed to our chair. Toilet. We need someone to take us to the restroom. Continence. We cannot control our elimination. Why can't we do these daily activities? It could be due to aging, an accident, after surgery gone wrong, or other health issues. What can we use long-term care insurance for? Let's say we qualify and the insurance company pays out. Depending on the type of policy, the insurance company can pay our family members or someone we assign to take care of us. It could be a personal care assistant, nurse, therapist, or other healthcare professionals. They can take care of us at our home, adult daycare center, assisted living facility, and our nursing home. What I have seen from clients qualify for long-term care insurance. If there is a living spouse, the insurance company pays the other spouse to take care of the qualified spouse. If the client have no living spouse, the mom or dad wants the insurance company to pay their daughters or son to take care of them at their home. Strategies on how investors can mitigate this risk. We can ask our family members to take care of us. Use our current money to pay for someone to care for us. Then, when we run out of money, we can sell all of our assets to pay for care. Medicare provides some benefit for long-term care but is very restrictive. Medicare covers only a maximum of 100 days of skilled nursing care and only the first 20 days are covered at 100%. And we have to qualify for Medicare. We must be at least age 65 to qualify for benefits. Medicaid is designed for people who have very limited resources to pay for long-term care. The biggest challenge is being able to qualify for Medicaid. Longtermcare.gov is a great site to learn more about Medicare and Medicaid in relation to long-term care services. Lastly, we can buy insurance products to pay for long-term care. It could be individual policy or buy into a group long-term care policy. Types of insurance products that can pay for long-term care services. Traditional long-term care insurance policy. Use it or lose it. We pay premiums. If we qualify for long-term care, the insurance company will pay out. If we pass away or cancel the policy before we need long-term care, we will lose all of our premiums paid. If there are return of premium or partial refund of premium long-term care insurance policy, chances are the premiums are a lot higher compared to a traditional long-term care insurance policy. The disadvantage of a long-term care insurance policies are we could decease before triggering care and our premiums could increase in the future. A hybrid product of life insurance and long-term care insurance. If we pass away, the life insurance company will give the death benefit to our beneficiaries. If we are living and qualify for long-term care services, the insurance company will give us the money to pay for care. This is the most popular product from my experience. A hybrid product of annuity and long-term care insurance. Two big disadvantages of long-term care insurance products. We may not need long-term care. Opportunity cost on the premiums. Instead of investing in long-term care product, we can do something else with the money. Three main reasons why investors buy long-term care insurance policies. Avoid being burdened to the family members. Protect their asset they work so hard to accumulate. Don't have to worry about taxes they could have avoided. What I mean by this is if you buy a long-term care insurance policy and you qualify for long-term care, the insurance company will pay out. If you are self-insured, you may have to sell your assets to pay for care. If you sell your house, anything above the exemption is taxable. If you have to withdraw from your retirement accounts to pay for care, money out of pre-tax accounts such as 401k is taxable at ordinary income tax rate. Questions to ask yourself. What is my long-term care plan? If I cannot take care of myself, who will take care of me? What difficulties will that person experience in having to step into this new role? Do I have a living will? Who will be my power of attorney? What are my options regarding Medicaid? How should my asset be titled? What is my total net worth? Should I use my current asset and or buy a traditional long-term care insurance? A life insurance policy with a long-term care rider and or a annuity with a long-term care rider. Popular optional policy features. Share care rider. Share care rider works like this. The husband has a policy and the wife has a policy. The wife qualifies for long-term care and uses all of her benefit. She is able to tap into her husband's benefits. If she does not use all of the husband's benefit, the remaining benefit stays with the husband when he needs care. Another example is, if the wife only used a small amount of her benefit, her remaining benefit will go to her surviving husband. Inflation benefit rider. This rider allows the policy benefit to increase over time with inflation. The increase can be simple or compounding. Simple is interest on principal. Compounding is interest on principal and interest. Partnership policies. Long-term care insurance partnership policies allow individuals to protect their asset so they don't have to spend their assets to qualify for Medicaid coverage. Normally, the amount of protected assets are equivalent to the policy benefits. 6 important steps in selecting a long-term care insurance policy. Financial ratings. We like working with A-rated companies. Medical underwriting. Understanding your current health can help us decide which company to apply with because some companies are better than others depending on your health conditions. Discount. Some companies offer discount when 2 qualified people apply for coverage. Premiums. You want to make sure the premium fit within your budget. Coverage. Tailoring the coverages you will want if you qualify for long-term care in the future. Coverage exclusions and restriction. Truly understand the policy and take personal notes that you can understand when you review the policy in the future. Next step. If you are 50 or older, find out how much long-term care insurance costs. See if you qualify. Ask what discount you may qualify for. There is no cost or obligation to request for information. You may not need insurance, but you should have a plan. Be sure to document your decision, discuss them with your family, and complete any legal document to ensure your wishes will be carried out in an appropriate manner. Thank you for watching. This is Tan, your trusted advisor.